You guys are watching this video right now all over the world. You're alive and blessed. Can't really complain. Welcome to Misunderstood and MYB Trading Course. In today's session, guys, we're going to go over smart money concept, also known as SMC. What is the smart money concept? How do we identify smart money concept? And how do we trade with the smart money concept? With that being said, guys, for this example, we're going to be using 3 time frame, the 4-hour time frame, to identify the overall narrative of the market. Is the market flowing in a bullish? Is the market flowing in a bearish? Or is the market just consolidating? Thirdly, we're going to move to the 15-minute time frame to drop our supply and demand zone. And on a 1-minute time frame is where we'll be looking for our entry and where we'll be having our patience. With that being said, guys, let's jump right into it. What is a smart money concept, also known as the SMC? Smart money concept refers to large institutional financial, like the hedge funds and the bank, that significantly move the market. Strategies such as liquidity, stop loss, and order blocks manipulate price movement. Smart money concept focus on identifying these footprints to help traders be in the trade and trade with the trade than being liquidity and being kicked out of the trade and price eventually going in your direction with you being inside. So how do we identify a smart money concept? First, we want to determine the overall fluctuation of the market. Like I said earlier, is price going up, is price going down, or is price just consolidating? Then we want to wait for a breakout structure to the downside or a breakout structure to the upside. After we have identified that, we want to wait for the liquidity sweep. Then we will want to have to be patient and wait for price to come back to our demand zone where we'll be looking for our key enter. With that being said, guys, in this diagram, I'm going to walk you guys through a little bit of example. So here, as you guys can see, we have price going up, forming a higher high, coming back down to form a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and officially a higher high. So price will never continue going up forever. It will always come back down. So on a bullish market, guys, breakout structure, how do we identify breakout structure? We wait to price to form the first higher high, which it did right here. It made a pullback to form a higher low, and then it break past the previous high. So once it mimicate and break past the previous high, that high become worthless because now we have a new high, which will be right here. And price did the same. It pulled back and form a new higher high, pulled back, form a new higher high, pulled back, form a new higher high. So that's how we identify a bullish market. And how do we want to trade that? What we will wait for, we will get our long. We get our long right here, and we will put our long on the pullback of the breakout structure. So like I said earlier, price came back up, form a higher high, form a lower low, a higher low, my fault, and then form a higher high. And then on the pullback we enter. So we will get our long, and we will put our stop loss below the previous low, and we enter right there. Simple as that. The entry is key. So then we're gonna ride the wave all the way to the top. So you guys can have a set and forget pattern, or you guys can come on trading view and hit this plus right here, and trading view will send you guys an alert to let you know, hey, price crossed this line, you should look at your trade. Or you get, see, look at that, and just like that, when price crosses price, trading view will send you guys a message. So how do we identify that on a bearish trend now? So what we want to do now, same. So after price form a higher high, higher low, and higher high, we want to wait the price to come back to break past the higher low. Higher high, higher low, higher high. Price came back down and break past the higher high, the higher low. So now we have a market shift from a bearish market back to a downtrend. So how do we want to trade that? Vice versa, we want to get our short position and we want to trade the pullback. So we wait the price to mimic the previous low and trade the pullback. Put our stop loss above there. Put our stop loss above there, guys. Just like that. And just like that, we're in the trade. Just like that. After we identify that, put our stop loss above there. And like I said, you guys could have a set and forget method, or you guys could pretty much scalp it and just want to watch your trade. I don't recommend you watch your trade, go about your business. So price eventually formed a higher high, and it came back down to form a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher low, higher high. Price shift again from a bearish trip, from a bullish to a bearish, and then we back to a bullish. So we want to come here again. We put our long here right by the pullback, and just like that, guys, we're in the trade right here. And then we can put our stop loss below there, and then we can just ride the wave all the way there. So now we're back on the chart with some examples. So let's go on the chart, remove all drawing. So with that being said, so we come on the overall market now, which will be the 4 hours, to identify is price flowing up, down, or consolidating, right? So after we understand prices on a see, price came up, higher high, higher low, 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 higher high. We see prices on a uptrend. So after we understand that, we want to come to the 50-minute time frame, and this is where the fun begins, guys. See, like earlier on the chart what I just draw, so all you guys want to do, right, is come to the 50-minute. You guys could come right here. Early I tell you guys a higher high, so like you guys see right here, what we want to do, we will put our stop, our mark up all our zones, our highest point and the lowest level. We're gonna come right here, mark up our demand zone, mark up our resistance, higher highs. Then what you guys can do now, after you guys understand that now, simple, all of these, right, if you guys can trade a 15-minute time frame, you guys could enter the trade on the 15-minute time frame. But normally I recommend you guys enter on the 1-minute time frame, because look, everything really always revolves around what happened on the higher time frame must happen first on the smaller time frame. So what you guys can do in the smaller time frame, after you understand the one, now you come to the 1-minute time frame, you do the same thing, guys. It's like clockwork. The stock market is like clockwork. As you guys can see, price came, let me just, right here. See, from right here, price went up to an uptrend on a higher high, on a lower low. It went up, higher high, higher low, higher high, higher low. And you guys can see it come back down. Lower high, lower low, lower high, lower low, lower high. And then price, the market shift from right here. See, you guys can see this was the last previous high. Market came right there, mimicked that right there, and it went back up. So we know the bearish market is pretty much over with now. So price came down, lower low, lower high, lower low. Market came back up, higher high, and then bam, just like that. And the pullback, you guys can come right here on the 1-minute time frame, and you guys could have put your long right here. Right below there, guys, stop loss above it right here, and you guys ride the wave there, just like that. Also, what you guys could do, if you guys want to have really have a confirmation code, you guys want to draw up your demand zone. So we're gonna come right here, price is there, we're gonna draw a resistance zone there on the 1-minute time frame. Then we're gonna draw our demand zone, which will be here on this order block right here. Just like that, guys. As you guys can see, price on the uptrend, price went up, form a higher high, came back, form a higher high, came back, form a higher high, form a higher. Now it's on a lower low. So now, as you guys can see, price made a market, a breakout structure took place right there, right? So now what you guys would want to do right now, you want a price to come back to this area right here where the breakout structure happened, and you want to enter, look for your trade right here. So when price do eventually come in this level right here, as they're doing right now, we want to come and get our short position, and then we want to put our short right here, our stop loss above this candlestick right there, and then we will then we will take our next take our profit, our next order block right here, or demand zone. Nothing you guys can do now but just be patient. So about 99% about trading is about you pretty much being patient and waiting on your perfect setup. With that being said, I hope this video find you guys more impactful and helpful in the future. I will be dropping more video on smart money concept and how to identify smart money concept. And liquidity, a short quick demonstration of what is liquidity. You will find liquidity at a bottom of a demand zone or at the top of a supply zone. So how do we find liquidity? Always look for a V shape. When a V shape took place, that's where liquidity happened. So liquidity we found on a V shape on the bottom of here. This where a lot of institutional traders, retailer traders will put our stop loss, and institutional traders like the hedge fund and bank will be looking for our stop loss and hunting for us on a demand zone. And vice versa, on the supply zone, it will be on top of the supply zone. It have to be a V shape. Price mimic it fast. It will be at the top here where liquidity will be up. So I hope this video find you guys helpful. See you in the next video, and always stay blessed and mind your business.